Hey guys, Offensive Dube, your currency coach and currency trader at FX Link. I'd like to welcome you back to another episode of our Forex weekend marking review. Now, if you're new to our channel and just joined us, this is an initiative that we decided to undertake where we give you a quick recap on what happened the week prior. Specifically, we show you on how some of the trades that we sent out our analysis on this past Sunday. We show you whether we hit take profit, got stopped out, and most importantly, at the end of the video, we give you what we like to call the lesson of the week. So, without wasting any further time, grab a pen and paper, and I'll see you back in a minute. Polish diversions at that point. And if all that does confluence everything I want, assuming that we get entry point somewhere around this area, this is how our trade will look like. First take profit again, we say we're going to be a retest of structure. This structure where it's around our 382 level. Stop loss would have to be, assuming that we complete somewhere around this area, 6 pips below. We'll be looking at a total stop loss of around 16 pips to 20 pips. So the first pair that we'll be looking at is the Euro Pound. This is a pair that I specifically sent out my analysis on, and initially I was preparing for a long opportunity. As you just saw in our recap, a bit of a relief to the downside where possibly somewhere at this area we might get a double bottom. Now, if you've been following us for quite some time now, you know that one of the filters that we wait for always is a double bottom before we take the trade. And that's not the only confirmation that we're looking at. Another important confirmation that we always want to see is a bullish divergence. So after analyzing everything that will be necessary from our high time frame, as soon as we get to our trading time from this case, this is the hourly, all we want to see will be a bullish divergence and a double bottom. So how did the week unfold? Okay, sorry about that. Let's remove this. Okay, so as you can see, as soon as markets open, we did get our anticipated relief, and price action kept pushing, had a bit of a slowdown, but initially at this point, let me check this. This is where we got our first filter that we'll be looking for, which is a double bottom. As you can see, this candle, if we try to zoom in, this candle managed to touch the close of these two candles and didn't close below it. So this validates our double bottom. Now what else will we be looking for? We mentioned that after getting a valid double bottom, the next thing we want to see will be a bullish divergence. The next question will be, how do I enter the trade? Okay, offensive, we got our bullish divergence, we got our double bottom. So how exactly do I enter the trade? Well, at this area, this is what I like to call a decision point. After getting this valid double bottom, you come to a dilemma where, first off, you said, okay, I'll put a pending order exactly somewhere at this area that as soon as price action gives us a push to the downside, then you would have had an entry, a pending order at that point. You want to be triggered immediately. One would have said, okay, one would have been more conservative and said, I want to see the double bottom, I want to see form, and then from there, I'll take a decision. Then there you cut to another dilemma. You might have said, okay, it's fine, what I'll wait for will be a close. So after getting this close somewhere at this area, this way we got the close of this candle, this way we would have went long. So not really far from where we would have had it from our first option. Now this is scenario number one, and find this scenario number two. So the third question or the third decision point you get to is that you might say, okay, Now you want to be a lot more conservative. You must say, okay, I did get a valid Dow bottom and I did get a bullish divergence, but I want to be involved in the market as soon as the move starts. So what I'll wait for will be to get a next bear market, a next bullish bear market, and at the close of that candle, this is where I'll take the opportunity. Now if you're that kind of trader, then congratulations, you're just like me. I'm kidding. But if you wait for a next bear market, which what I specifically prefer, this is what happened. So at this point we didn't get a bullish candle. Now as soon as this happened, this is where you had to be a lot more observant. If ever you get a candle that closes below the wick of this candle, this invalidates our Dow bottom. But as you can see, this candle failed to close below the wick of this candle. So at this point, we still have a valid Dow bottom. Now, and finally, okay, let me drag it up there. And finally, at this area, this last candle, you can see that we got a break and close below this week. Now this invalidates our Dow bottom sign. So one of our filters was violated, and all we have now is a bullish divergence. So at this point, we'd have to stay patient and wait for another valid Dow bottom. So how did the rest of the week play out? Let me try to remove this. So this point, price action keeps pushing, goes up. I'm quite sad at this point that I would have been in profit. Looking at these few candles, and price action rallies up. Still at this point we're waiting for two confirmations, a bullish divergence and a Dow bottom. Till then, we don't have any setup for us, so we patiently wait. Price action pushes, gives us a retracement. At this point, this is where now I try to add in my retracement tool. I want to see significant levels where I could hop in on this trade if it offers me another opportunity. So just as we pull out our retracement tool, I was going to take my box over here, try to lay out a zone. So this was a pretty significant area. This is where buyers come in aggressively. I was going to drag this across. As you can see, this is just in between our 618 and our 786 zone. So this was another area that would have been key to me to create another chance to hop in this trade. Let's try to change the color, make it yellow mellow. Let's try to make it a little bit darker. Okay. Now that we have identified another kill zone, the next thing we'll be waiting for will be a Dow bottom and a bullish divergence. We have identified a possible kill zone. Now price action breaks below this area, and still no valid entry. And keep pushing until this point. So as you can see, we did get pushed up to this level and a retracement, where the wick of this candle managed to touch the low, the open of this candle, and didn't close below it. So this area, this is where we got our first filter, which is a Dow bottom. Now one other filter that we want to see is a bullish divergence. Now do we have a bullish divergence? Unfortunately, we didn't get any bullish divergence at this point. So again, they get a valid Dow bottom, but didn't get a bullish divergence. So we have to stick to our rules. Couldn't take this trade either until we got a bullish divergence. And what happened? Now we did get a next bullish bar market. So for instance, if we didn't manage to get a bullish divergence, this is where we would have had our entry point. Let's try to remove this. Guys. and take our tool, assuming that we had an entry point somewhere at the close of this candle, and stop loss would have been below this lowest low, 10 to 5 pips depending on your style of trading, and take profit would have to be, assuming, let's just hypothetically say, would have to be back at our initial take profit. So at this point, let's try to drag it across. Okay, it's fine. Keep in mind, guys, that this isn't a trade that will take. Now, this is just an instance that when one might say, you know what, offense, rules. Because of this rules, I couldn't enter the first part, and now I have to miss another trade because of my rules. You know what? I'm taking this trade, and then something called FOMO steps in, and you break your rules and enter this trade. And what would happen? At this point, the market is going against you, but not that much. So you're pretty calm at this point. Then price action rallies, and this is what you get for breaking your rules. You get buried, you pay the price. Now, in Forex, this isn't a cheap price. This is where you lose money. Now, I was doing this just to try to emphasize the importance of sticking to your rules. Just to show that from the whole week, from our initial setup, from our initial analysis, we couldn't take this trade because we never had our setup filled. So we missed the opportunities, didn't trade on this pay because we had to stick to our rules. And even if we did have an opportunity, complete setup fill, you'll see that eventually we would have got stopped out and price action went the other way. Now, I think the most important thing you could take from this review is that sticking to your plan, guys. I know I emphasize this week in, week out, but I think it's pretty important. In place with psychology, you don't have what's called FOMO, the fear of missing out. Patience. Yeah, I think the lesson of the week would be FOMO, fear of missing out. Don't have a fear of missing out. Nobody could ever lose money from staying aside from the trade. Yes, you can lose money if you get in and get stopped out, but you cannot lose money from standing aside, from not actually taking the trade. So if you don't have your initial setup complete, don't stand aside. Don't try to force any trade. Don't have a FOMO. There are plenty of other opportunities in the market. So yeah, I hope you enjoyed the first part of our review. This was quite a simple type of a review, nothing much to go on. So we freshen up, take a break, and I'll see you on the second part of our video.
I'll be looking to go long with this position size. Let's say, hypothetically speaking, price does come to our support level, give us a double bottom with a bullish divergence and a higher close. I'll be taking my first targets right here for a 45 pip reward, and then for stop loss, I'll be going 10 to 12 pips lower than this low, which would mean I'll be going for 22 pip risk on this particular trade. Okay,
so welcome back to the second part of our video. Hope you're freshened up, ready to get going. Now, the pair that we're looking at is the Aussie dollar. This is a pair that my partner managed to get a piece of. Actually, he didn't even get a piece of it, he got a whole lot of it. Now, as you just saw from our recap, we were basically waiting for a retest of structure somewhere back to this area where we had narrowed down our kill zone. If I could try to figure it across, we mentioned that as soon as price action gives us a push somewhere at this kill zone, this is where we're waiting for two filters. Where number one, as always, would us to get a retest of structure. What that simply means is that we were waiting to get a double bottom, and finally, after getting that double bottom, we'll be waiting for a bullish divergence next bar market, and then we enter the trade. anticipating a long opportunity. So did we get those two filters? I don't know. Let's wait and see. So as soon as markets open, bit of an indecision bias at this point. There are traders who have what we just call FOMO in the first part of our video. They see price action waiting up, they get emotional, have a fear of missing out, feel like, I've missed the trade, it go in my direction, and I didn't get a retest of structure. Damn you, Mandla, damn you. And you wanna hop in this trade. What happens? We'll just have to wait and see. Now, at this point, price action starts going up. You're beating yourself to death. You force the trade. Now you're in the trade, but not us. Not us at FX Lane. We're very disciplined. We don't have FOMO. We're still waiting for that entry points exactly at our kill zone. So not us. We don't have FOMO. But if you force the trade at this point, I think we both know what's going through your mind. Damn. Shouldn't. And price action just collapses down where? To our entry point. For us, the more disciplined trader. Now as you can see, this candle rallies down, gives us a close. But keep in mind, it didn't close below the wick of this candle. So what does that mean? This validates our double bottom. The first filter we need in order for us to take the trade. So once I get a double bottom, I'm pretty good at this point. The only thing I want to see is a bullish divergence. Now we did get a bullish divergence on the high time frame, but now I also want to get a bullish divergence on this time frame just for entry purposes. And if I could take my tool from where price action is coming from my RSI, you can see that we were sloping up. And from this level, from where we started to draw from our RSI to where we currently at, you can see that we're doing the exact opposite. We're sloping to the downside. Now, you can see we got both of our most important filters where this validated our double bottom. We got our bullish divergence. So the next question will be, how do I hop in the trade? Okay, we did get a bullish divergence. We did get a double bottom. So do I just press the execution button? Now, that's also an option. That's also it depends on your style of trading. Because one might have seen, one might say, okay, I got a very double bottom. I'm looking to go in this trade. Another person might say, which I specifically wait for, is the next bullish bar market. So the next bar, I wait for it to be bullish, higher close, and from there I'll be looking to take the trade. And what happened after that? So we got a bullish bar, a higher close. Now this completed my partner's setup. At this point, he got everything he wanted. He was ready to enter the trade. And this is where we were waiting for it. This is where we had our entry point. Where we mentioned first take profit will be back at this retest of structure. Stop loss was just a few pips below this previous low. It was between 5 to 10 pips. He said 5 pips, I remember quite well. It was 5 pips, so 48. This was the first take profit. And this was this area, this way we had anticipated our second initial take profit. So what happened? I'm sure everyone's quite eager, and for those who took this trade, I know it's like, yeah, this is where it all started. So we're in the trade, price rate is up, and at this area, if you remember quite well, this is where we had our first take profit. Now you get to another decision point. Does one say that, okay, I've had enough, I'm not greedy, I've had my fair share, I'm taking this money, and yeah, I'm cool with it, and let's see how much you'd have got. let's try to bring this side. Okay, so you've got a total of 30 pips for a stop loss of 13. So if this was more than a 1:2 type of chase, you would have been like, well, I'm not greedy, I'm good with my 30 pips, I'm leaving. Well, and a lot of them might have said, okay, I'm looking to ride this trend, so I was waiting for a break above this level, and as soon as I get a retest at this point, I will wait for a continuation to the upside, and this is where we'll be looking to break even and ride this trade way up to a second take profit. And what happens? Let's see. Price action does break up, so what are we waiting for a retest? Break above, close above. This is also a valid sign. After you get a break above, close above, you could also break even. And of course, like I said, let's say we got our retest the structure. Now we break even. We're in a risk-free trade. For now, we go for a total of 62 pips. Price action goes up. We hit a second take profit. Now, we come to another decision point. I know it's getting quite boring. One might say, okay, I've hit second take profit, but now I'm looking to ride this trend. I want to see where this trend goes. So, what are we doing at this point? This way we say that 1, 2. How do I? Okay, let's just do this. We take some of our positions. Meaning at this part, we took some of our positions from this area. Let's try to give me a minute. Try to get this. I don't know. Okay, but we took some of our profit. As you know, this area, this whole green area, this, so we had 30 pips. So we cover some of our profit already. Now, all we're looking to do at this point is to ride the trend. We got our 30 pips, and now we just want to see where this trend, where this trend is going. So we want to identify next structure levels. If I go pull this up, this is the next structure level that we will be looking at. We've broken this levels of structure. We were looking to see if price can hit this level of structure. So these are the two next level of structure that we expect to see some sort of a reaction at. And what happens after that? Let's try to move this. And price action really is up, comes back, we tested the structure, we took some of our profits, now we're just looking to ride the trend. Bam! This is where we hit level of structure. Now we went for additional. We had an additional extra pips of, let's see, to this level of structure. Okay. And this way we were at. So this is an additional 30 pips. Now you can run another dilemma. Already you got a total of 90 pips in profit. You can still be looking to ride this trend up, but that will be a little bit greedy, because at this point, this is what I see. I see a bearish divergence. This is the first sign of trouble. So already you get a total of 90 pips, more than expected. You see a bullish divergence. So at this point, this is where one might say, I'm not looking to get greedy. I've had enough. I'm good. And this is basically how I decided to ride up this trend. And what happens? Look at, I miss some of the other move, and it's still fine. Still good, you know. So again, lesson of the week is FOMO, fear of missing out. We saw another area this point where one would have had a bit of a FOMO, but yeah, good, gravy. I hope everyone is good. I hope everyone is gravy. I'll see you next week. Peace.